pretty in time in 2021, and I was going to share with you what the ATO is saying that they're going to be targeting in the 2021 tax returns. So just a bit of background, there has been more and more money being invested by the government in budgets to ATO resources. So I know you may hear a lot of times that the ATO is going to be more active, but in 2021, it really does look genuine. And also another factor perhaps for the increased ATO activity on work-related expenses has been because it's been pretty lenient over the last year or so with COVID conditions, not chasing debts, and so they'd be probably be pretty particularly keen to get pretty active and bring some tax in for the government again. So yeah, definitely ATO is setting their sights on work-related expenses. So particularly motor vehicle expenses, travel claims, laundry, uniform, permit purchases and business trips. Their expectation is that these deductions should be reducing over 2021, particularly with more people working from home with COVID-19. So it does make sense. There should generally be lower travel claims for you. So keep that in mind. That the ATO will be expecting that in some industries. The ATO doesn't particularly expect to see too many jumps in home office expenses because some of these may have already been in existence for certain taxpayers. So, and the claims are a little bit less than the travelling ones. So they're expecting to see smaller jumps in that. What the ATO has specifically mentioned is they don't want to see you claiming exactly the same amounts every year. So if don't come into your account and say, what I claimed last year, let's do the same. Actually look at what you've spent this year and claim the genuine amounts of what you claimed this year. That's really important. So they're going to be all over, I think, anybody just claiming the same as last year. So definitely they made that clear that they don't want to see that. So keep that in mind. Taxpayers will need to ensure that they can substantiate their claims regardless of what amount is claimed in previous years. So no matter what you did last year, treat this as a new year and have the receipts for this year and substantiation for this year. So, and in general, I want to say no to all deductions. The ATO say there needs to be a nexus to work, which basically means to me there needs to be a relationship to work. You can't just claim things and make out they belong to work. So studying needs to be related to your work, etc. You need to have substantiation to prove your claims, such as receipts, tax invoices. You may need to have diaries of hours worked at home over COVID. You may need to keep kilometres travelled diaries of your trips to work-related sites. You may need to have proof of your telephone percentage that you're using your phone for work from bills. One of the big ones is to keep your car logbooks, and they need to be less than 5 years old. Importantly, you need to have actually incurred the expenses themselves as a taxpayer to claim it. So you shouldn't be claiming, for instance, employer reimbursed expenses, or claiming family internet when you're not paying for it, or company phones if they're not yours, or using someone else's car, for instance. So yeah, you have to actually have the expense to claim it. You need to also make a reasonable apportionment of work-related and private amount of expenses. So if something's bought and you're using it partly for work and partly for personal reasons, such as a computer, you need to have an allocation of private use percentage. For rental properties, the ATO is particularly targeting some common mistakes, for instance, claiming wrong percentage ownerships. So you may be lying about how much you actually own the property because you can claim more than your wife, for instance. Wrong interest amounts. So particularly in general, it's a big claim. So getting interest amounts is a bad thing to do. Or if the ATO suspects and audits you, and if you're including home loan interest amounts or wrong amounts there. Also claiming expenses fully instead of depreciating capital expenditures, and also incorrectly claiming building allowances or other capital costs, particularly done on big items, or done with depreciation reports, or incorrectly claiming depreciation fittings and fixtures for newly acquired houses in the last couple of years. So we're all going to be checking those things. All right, so that's what to look out for this year in tax returns 2021. Again, I stress, if you do everything right, you'll be okay, but don't just start making up things and putting in what you did last year, because I think the ATO is coming at you if you're going to try that on again. All right, also during the year, if you come and do your tax returns and we see on the ATO's notes that they've detected that you're a high expense claimer, we'll let you know, or endeavour to let you know, and that is a sign that you could be getting close to the point of where they may want to audit you and actually check your receipts and substantiation. Now that's okay if you got everything right, but you don't want to do the right thing if you get into that point as well. But there are genuine cases where you're claiming more than the average person in Australia. So yeah, something to keep in mind. Yeah, so looking forward to your next tax season, and I hope you have a good tax return this year, and I hope you're safe and well in 2021. Thank you. I'm Romeo Caparasa from Tax Accounting Adelaide.